Great. Okay, so welcome to the room, everybody. In front of you is a 1-minute chart of the S&P future. So I'll hand you over to Tom Williams.
Right, are we ready? Can we start now? Yeah, hi everybody. Tom Williams here. Lovely to talk to you, as usual. I've got Peter here, as you know, and I've got Rita here as well. Rita's going to check the screen to see if there are any questions to answer, which I'd love you to type in any questions, any chart we have that you'd like us to look at. Now, it's been whipsawing around here, this market. Now, I just normally don't follow this 1-minute chart, but this is a 1-minute chart. But those of you that are impatient, itchy fingers, and want some action, at least the 1 minute's flicking around, as you can see, every minute. And people are very surprised. They say, well, how can those same rule sets work on the 1 minute and an hour in the daily chart? Doesn't make sense. Well, what you're looking at, of course, is the underlying principles that drive these markets. And that's why they work. Right, we go back here, so 1 minute. Right, so lo and behold, right, you've got a nice, what's this? Right, so we got an automatic signal, look. So you don't have to do any work, it tells you there. Now, I know it's easy to look at this stuff in hindsight and say, oh, look at that, yeah. But you've got to train yourself somehow. The thing is, you see, that when the market's falling and the news is bad and it's been falling for a frightening amount of time, and then suddenly out of the blue, a green arrow appears suggesting strength, you don't really want to accept that, or your mindset is not there to accept that. But in hindsight, you can see that they're fairly accurate. So how you overcome that, I'm not quite sure. But the only word I say I do know, you have to understand the underlying principle that brought that up. And now, obviously, what brought this up was the very high volume that came in after you've seen a bit of a down move. So it shows you that professional money there must have stepped into the market and bought. It's also closed well off a low, look. Now the very next bar is interesting as well because it's a down bar. It's really a test, look. Look at that low volume. There's nothing there at all, look. So, and yet on the previous bar there was this high volume. So that's telling you that yes, there was buying, sorry, it's updating. It's a 1 minute chart. So it shows you that was definitely stopping volume, look. What's the signal tell us? Oh, shakeout, yeah. Well, they are shakeouts, aren't they? And the very next bar is a confirmation bar, down bar, and all that selling is gone, disappeared, bang, finished. So it starts going up on the back of that, look. And whenever you see a red down bar, right, this looks like a test, doesn't it, look? It's a down bar, narrow spread, closed near the high, and look at that low volume. Volume is low and is less than the previous two bars. If it's not less than the previous two bars, then there's something wrong. So off it goes, look, until it goes up here to this up thrust. Sorry, it's updating here. There. So we've got sudden weakness suddenly appeared. What's that say, Peter? Up thrust. Good. Now, why is that an up thrust? Because it's been marked up, right, to collapse near the low, right, after you see an up move. Don't forget the vulnerability kicks in when you've already seen an up move behind you. And there's one or more groups there decided they were going to take some money. And that's the result of them taking money is the result of what that bar and volume looks like. Very high volume. Okay. So it comes off, not too much, a couple of bars. It's not a lot of selling pressure. Don't forget they support the market to sell more if they're selling. Right, no pressure there, up it goes. But there's also no demand here, look. Now this is a 1 minute chart. Now what's interesting in the 1 minute, we've got a sign of weakness here as well. That happened a minute ago. Now what's interesting with this, these very low time frames, you can see the tick volume working. My magnifier's not working though. Pete, what's happened? Turned off. Oh, go on then. Sorry folks, I've got a magnifier on the program. I have to have it for me to see what's going on. And I don't know, something happened.
Right, now try again.
That's it. Is this 1 minute?
Yes.
Now, what I was saying was, what is fairly interesting here is to, well, there's an up bar, look, on very high volume. And we've got some also red arrow here, which must mean something. So it's hitting, seems to be hitting some supply at the moment. Unless that's pushing through an old top to the left, which I can't see at the moment. But what's interesting is, when you look at the live bar, there it is, you can see it's moving quite rapidly. And that, as you all know, is tick volume. Now we don't have it as such, but I'm hoping that it will be put in. But that's Gavin's realm with the programmers. But I have had tick volume in the past. And what it does, the computer adds up all those ticks on each bar. Every time it moves, it's a tick. It adds up how many ticks has taken place on any one bar. And that gives you volume then. And you would be surprised how dead accurate that is. We all know that at times they can interfere with the volume figures. Notorious is London, of course. They can withhold it for 48 hours. You know, it's really, and you're paying for that data too, which is all very, very wrong for us. But they get away with it because most people do not understand what volume is or what to even look at. And that goes for some of the professionals. They've got no idea how to read volume, some of them. And so therefore, those that do, they put these restrictions knowing that's going to help them and a few others. But they can't do that with tick volume, can they? They can't interfere with the figures. So we look forward to having a chart which will contain tick volume plus what they say is a real volume. And of course those programs where the volume's delayed to the next day, which again has got to be skullduggery, it has to be. These days of electronic communications, where they can transfer data around the world in a second or so, obviously, why wait till the next day? Must be a reason. And of course the reason is that they know how valuable volume is to those that can read it. But tick volume is very interesting. You could see it working very well on these 1 minute charts. Okay. Now, any questions about that before we look at something else? This is a 1 minute chart. Maybe too fast moving for a lot of people. I don't normally look at this, to be quite honest, but it does. No question at the moment. Okay, try a 20 minutes, Peter, of the mini S&P. Let's see what's going on. 20 minute, right? Well, here we've got a sign of weakness, look. No result from effort, fair enough. It's been an effort to go up, look. And here, it's up. This is a classic sign of weakness, right? Up bar on a narrow spread, look. And the volume's, well, relatively low, isn't it? But it's that up bar, narrow spread, after you've seen an up move, that's weakness. Right? Professionals see that. They're fully aware of that. And probably some weakness on the previous bar, which we haven't noticed. Okay? So they turn it around, plunge it down as fast as they can, deep as they can, to throw off traders, catch stops, mislead the market, or mislead the traders, other traders, as much as possible. Right? Now we know, we can see that there's a bit of stopping volume in this one. It's really a shakeout, this. On that, the market turns around and shoots up a bit. What's that say? Oh yeah, reversal over 2 bars. Fair enough. So there's your down bar and there's your up bar. Now we know these markets like to be tested if there is going to be any move up from that stopping volume and that apparent sign of strength. So there we come, down, down, down. Now we're back down to that level. Now I'll draw a line here, look. There's the level where the first stopping volume came in, first sign of strength, and now we're back down to that level. It's the level that's important. We're back down to that level, and what do we see? We see a down bar on a narrow spread, look, very clear. Not only is it narrow, but it's closed in the middle. And not only is it closed in the middle, but the volume is low, look, showing that the volume or supply that was here at that level has now disappeared. And that is a sign of strength. Definitely. Market responds to that. Up it goes. Sorry, here. There's your down bar, narrow spread, closed in the middle, volume low. The market responds to that. Any red down bars be a sign of strength. And so it's now trying to go up. You have a widespread up, look here, closing on the high, which could easily be the volume is a bit low to be absorption volume. When I say absorption from any traders that are locked in these highs, or even here, which they do. They widespread up, push it through, right, encouraging these traders that have been locked in and alarmed when these lows appeared, now not to sell. Because to the professional trader that bought on these lows, this is apparently high price for them to pay. And they know how humans react as a herd. So they push it up, widespread up through. That will encourage people to say, oh, look, that's all right. Look, I'm making a bit of money now. And they stay in there. Sorry, but folks, the phone just went. Risa's answering it. Carry on. Right. Sorry for that. So this is a 20-minute chart at the moment. Now the market has been whipsawing something dramatically, because if we look at, that's a 20-minute look. If we, sometimes I look at this 4-hour too. Now this is a 4-hour chart. Now this is quite a long-term chart, isn't it? But look, I think we looked at this last week, didn't we? We have a shakeout here, fair enough. That's what took it up. But this is definitely what we call a top reversal. It's marked up, look. There's no signal on that, but there is on this reversal bar. That is definitely a classic top reversal and a sign of weakness on the 4-hour. Note that there's a little top tail to it, not much, but there's a little bit there. When they try to mark it up even further to catch stops, mislead as many people as possible, traders. There's a turnaround and plummet down to close near the low is what we call a top reversal after you've seen a bit of an up move. Don't forget, it can't be a top reversal unless you've got an up move behind you. That makes the market vulnerable to one or more groups deciding that they have to move, either start clearing their accounts or whatever. We don't ask too many questions. Now, it would be nice to see a bit of weakness now, right? Hopefully no demand. So up it goes a few bars, and there we are. Up it goes, narrow spread. Computer agrees with us, no demand. It's obviously no demand. Look, it's up bar, narrow spread, very low volume, after you've seen this classic sign of weakness. And so it come off, but now it's going back up, or try to go up, look. But this weakness, it may be looking as if it's going up, but this could easily be skullduggery, because you've got this, you've got two serious signs of weakness right behind you. So it'd be unusual for them to go bullish with two, especially this top reversal, look. They're just whipsawing it around. There may be some bad news or good news or whatever, but they do whipsaw the market around on news. Any questions, Rita?
There's a few requests for charts, so we'll get to them in a minute. John is asking, is a tick chart the same as tick volume? Yes, it is, the answer to that one. Would Tom go long after a no supply bar, or would he then wait for a test bar after the no supply bar in order to go long?
Sorry, say it again.
Would you go long after a no supply bar, or would you wait for a test bar after a no supply bar?
Well, the trouble with answering questions like that is that I have to go on the look of the chart, because when I look at the chart, I seem to see a lot more than a lot of other people, and that would influence me whether I want to go long or not. So I can't pinpoint it down. I have to actually look at the chart, and that's the only thing I would suggest you can do is that over time you'll get to read the chart like we can, or even better, hopefully. As you can see, the charts can be read, but you're up against professional money who are whipsawing the market around to dislodge people like you and me. They don't want us making money.
Okay, Robert, could you translate, unless Tom, Robert says, does market create now TBR to upside on H4? Yep, 2-bar, oh, yep, so does market create now a 2-bar reversal to the upside? All right, so do you think it's, could it be creating a 2-bar reversal now, Tom? No? Do you want to speak?
Well, it's not, you can't say it's creating a bottom reversal, or a top reversal now, because the chart obviously hasn't finished. 20 minutes. You have to wait until the bar finishes to. Oh, this is a 4 hour. Sorry, yes, you're right. Thanks. Oh, it was 2 hours ago. Thank you, Peter. But that weakness that we see here is quite significant, and you've got this no demand right here. That's what we're saying is going to stop this market from going very far. But if you want more closer time frames, you have to look at a 10-minute, 20-minute, 5-minute. You can read all those charts. But as you get more and more skillful, you'll probably hop around these different time frames and even look at that 1 minute, which is kind of interesting as well. But they all portray what professional money is doing. Now we know that because in hindsight it's fairly easy to read, which I apologize for. But there you are. Everything's easy in hindsight, I realize that. But then your skill has to develop at the live edge to recognize what might be going on. Hopefully is going on.
Eleni would like copper. We'll put the copper chart up.
Did we look at copper last week?
Oh, where is it?
Continuous.
Further down. We're just trying to find copper. I thought it was there. It seems to have... Oh, we found it. HG will... Is that okay? Is HG okay, Eleni? High grade copper. Okay, we'll have this and then another chart.
Right, well this is copper. I don't follow copper as such, but it certainly looks weak. Could you draw a trend line on that, Peter? The two highs and the first low. This is traditional way Wyckoff said you should draw trend lines. And over the years, that's it, he's been proven fairly accurate, as you can see by a lot of these charts. Now that's the trend, or appears to be the trend at the moment. And you would expect copper to fall off that top trend line and even fall to the lower trend line. Now I can't see any reason. Well, there's a fairly sign of strength there, look. No supply, and that's hit that area where we draw the support trend line. It's a down bar, look. If you can remember this, first of all, the market has fallen, right? Not very far, admittedly, but there's at least two bars there. So at least there's a bit of vulnerability for the professional specialist that trades in copper, thinking, right, I can make a bit of money here. And that is portrayed on the chart as a down bar, look. Narrow spread, this is the key to it. Closing in the middle and low volume. The computer's been told that. And so it says, okay, this is what you told me. So I'm putting a signal on it and telling you there's no supply. And that's why it went up, look. But it's whipsawing a bit. If you could live through that, I don't know. But that's a red down bar, look. The volume is not exactly less than the previous two bars. There could be a little bit of buying there, not much. But you would anticipate that copper to come off, just going by the trend lines. You certainly wouldn't be wanting to rush in buying that. Not there. But if you want to buy and scalp a bit, this is what you've got to look out for. Down bar, narrow spread, close in the middle, and the volume is obviously less than the previous two bars. Professionals see that, so they mark it up next bar to cut as many traders out of that as possible, because they spot that straight away, but they don't want you hesitate. If you hesitate, see, bang, you've had it. So that's the trouble with, well, it's not trouble, but it's a trading skill that you've got to learn to overcome. In other words, when you see something, you've got to identify it correctly and then go in. They know that. That's why they marked it up, to cut people out of that. I'm saying that. It's fallen, and now it's trying to go up. But that trend would suggest that copper market's falling.
Okay, the ES daily chart for Ming.
I've got a daily.
I think we need to put one up. We'll put the cash up. Yeah.
There you go. The S&P 500 cash.
Should we put more bars up?
No, I don't want more. I want less. So it's Monday, Tuesday, Wednesday, Thursday. So that was Monday, right?
Yeah.
I'm not quite sure what we said about this in the newsletter. Any idea? We would have looked at this in the newsletter. I can't remember exactly what we said. Oh yes, that's right, yeah. We suggested that it didn't look all that strong, and don't be surprised if it creeps up that top trend line, which it hasn't. So it's come off. Well, not a lot, but it's come off. Well, this very last bar certainly doesn't look very strong, does it? Looks like an upthrust. But you've got a mixed bag here, because these down bars here at the early part of the week, Monday, Tuesday, Wednesday, right, this looks like they attempt to shake the market out. This is what we call a bottom tail. This was Wednesday. So they marked it down, look. We've got no serious sign of strength, not there, but we've got something here. Oh, I can't see that. See, it's a box. So I would say that doesn't look all that powerful. That definitely looks like some sort of upthrust or no demand upthrust. So it's not looking terribly bullish to me. But it's nothing obvious that I would step in and trade at. You need to wait. You have to be patient. That's the whole difficult part of trading. You've got to sit there. Hopefully this new software that Gavin's developing with the Russian programmer will alleviate a lot of that, because it'll only come up with signals that are known to be as accurate as possible. So you won't have to sit there waiting, which is the part that destroys most traders. But that looks weak to me.
Okay, for Ian, he would like DST Systems. It's top of the unusually high volume list on Nasdaq.com, says. Just, is it up to date? To the 8th? Yeah, so I should.
20 bars up. Wow, that looks like stopping volume. What does it? It's a potential. Yeah, well, potential, yeah. 20 bars.
But that's 8th of May.
So it's updated to yesterday. And what chart is this, Rita? DST Systems. Well, we've had a bit of a down move, look. Wow, quite a substantial one. Don't forget you trade Harmony with the index. And we notice that there's the no demand that we spotted. Right. Turns around, bang. Very widespread down on very high volume. Now that means that could be some stopping volume appear, but there's not enough information there. The picture's not finished yet, is it? If that's stopping volume, the next bar will be up. And then it will go sideways. And if it's bullish, it will then test somewhere along here. But that's nowhere near developed yet. On the other side of the coin, that could be a sign of weakness. Whenever you see these wide spreads down, close on the low, well, it's on increase in volume. This is more than increase. This is very high volume, isn't it? Yeah, yes.
So far, it's on an up bar to about here, and the volume is up here. So, you know, it's at least 60% higher.
Well, Peter says that today's gone up a bit, and the volume is even higher than yesterday. That's bearish. That means that that's not going anywhere at the moment for a bit. At the best, you'd expect that to now zigzag sideways. But if it's bullish, if they're buying, it will gradually sort itself out. And you will see a down bar back in the area, or this level here. It's a level important, remember, where this high volume first appeared. You will see a down bar, if it's bullish, be a red down bar, narrow spread, probably closing in the middle, and the volume would be obviously low, less than all this volume here. But that's nowhere near there. But we're projecting what might happen in the future. So if it does happen, you're ready to act. You've done all your thinking. You're just waiting. You're analyzing it as it unfolds. But right now, if it's very high volume, Peter says he's looked at the volume for today. It's even higher than yesterday. that means there's a lot of supply there. So that's not going to go up. It's going to go, at the best, it's going to go sideways. But the professional operators behind these stocks, they will want to make money. And that's how they make it. They wait now until there's no supply, which they will be able to see on the down bar, back into this level here. The level is important, right? Narrow spread, volume less than the previous two, and certainly less than this volume here we can see at the moment. Then it'll go up. But right now, it's highly unlikely to go up. If it goes up on this terrific high volume, it won't go very far, and you'll see an up thrust or something, and it'll come off. Anything, Rita?
For Ian, no, for Pete, he says, would you look at Twitter, TWTR? We've got the daily, we think. Twitter. Gosh.
Is that Twitter?
Yeah, that's Twitter. So, do you want me to put 20 up? Oh, you have. How did you do that?
Well, there seems to be a lot of weakness knocking around in this Twitter. I mean, when I say that, you've got all these signs of weakness at the top here. What's that, Pete? Up thrust, sign of weakness. Right. You've got this, be no demand. What's supply, yeah. And there's your no demand, look. Up thrust. Okay. They're so weak, look. They've gapped it down for some reason. Now, admittedly, there's a green arrow there. But remember, it's not valid unless next bar's level or up. If you read the text, it will tell you that. So it's gap down. So that's a fairly serious sign of weakness there. This isn't going anywhere for some time. Although you do have a down bar here on a narrow spread close in the middle. This is probably not going to go much lower for the time being. Looks to me as if it will go sideways. But that is a sign of strength right there, look. What's that? What is it? Test after shakeout. Yep. Well, the computer calls it a test after shakeout. Well, fair enough. That is obviously a shakeout, look. Gap down bar like that. But you've got the very high volume on that, but it's still closed on the low. But this bar here, there must have been buying there, because here you can see it's definitely a down bar, narrow spread, which I've said this is what you've got to look out for. Narrow spreads, closed in the middle, and although the volume is still quite high, it's not really less than the previous two bars. This is going to go sideways.
For Eleni, lumber.
Oh, lumber, yeah. We definitely looked at lumber last week. I can't remember what we said about it. Yeah, that's why, because we mentioned it last week. Right, well, that definitely, obviously, a shakeout of some sort here. They turned it around, widespread up. On the back of that, look. These widespreads up like this, close near the high, are deliberate. because there are many, especially professional traders, can see this as a shakeout. And they don't want to give anything, and they want to give as little as possible away. So it jumps up, but that looks like a test. You've got down bar, the spread is narrowed, the volume is low, low. It's not high. And it closes in the middle. So that looks as if it wants to go up. And we must have drawn these trend lines last week on this. So it more or less bounced off that trend line, got very close to it, up. This looks as if it wants to go up. Lumber looks definitely more bullish, because you've got the shakeout in the background, you've got down bars with no supply on them, hitting that lower trend line. That looks more bullish than bearish, definitely.
So Eleni says closed longs from 222. So put up more. 222. Is that right, Eleni? There's no 222 there. 332, sorry. There you go. Hang on. With the same chart, Tom, but I'm just showing you Eleni was long from about here, as closed. I don't know, but very good. Where did you close, Eleni? Where did you sell? Just waiting for a reply. 3141. What? 341. So Eleni was long from there, about there, and closed at 341, sort of up here, Tom. You want to say something?
Congratulations. It must have been hell though when they had that shakeout. Oh, back there. Oh, before the shakeout. After the shakeout, I mean. Yeah, that's fine. But the shakeout's there to shake people like you out. Why should you, some unknown out there in the wilderness, make money out of them? They don't like that. And therefore they do their best to whipsaw this market around and mislead as many people as possible. I'm afraid that's how it works. But they can't overcome the obvious principle of supply and demand. When they have that shakeout like we saw there, that is definitely a bullish. That is a shakeout. That's not stopping volume. Shakeouts occur as the move is up in progress. Okay. Right.
Yeah, so Eleni says she traded this from the shakeout, which is fantastic. Well done, Eleni. Yeah. If anybody else has got any charts you want to look at, okay, John is asking about the recordings. Did that get sorted out? Right. Okay, my husband's in need of a kick from myself, so I'll sort him out with that. Okay. Cotton. Can you bring up cotton? And then after that, gold for Ming.
Right, well, this doesn't look very healthy cotton, does it? Although we do have some sort of shakeout in the background, look. That's why it went up. And that looks like a bit of a test there. Right, so they allowed them to have an upthrust. But look at these up bars here, they're on no demand. Unfortunately, there's no signal appeared. But that is look at that low volume. Look at that, look here. Very, very low volume as it tries to go up. I'm surprised there's not an automatic signal there. We'll have to look at that. Come off. Now it's gone up, look. And that doesn't look very healthy bar. That's certainly not a bullish looking bar, is it? It's a blue up bar closing in the middle, and the volume is sort of average. So that's not the sort of instrument you'd be dying to dive into and buy at the moment. Wait till there's something you can get your teeth into, something you fully understand. Because these markets are so treacherous that if you don't do that, you're going to simply lose money and you'll get fed up with it after a bit. And then you won't see the enjoyment of being able to make money, read these charts like this. Wait until you see a definite principle that you personally understand, fully understand. And then, of course, if you happen to be wrong, close out immediately. That's the important thing. Never, ever ride a loser. Never. That's one of the fatal things you can do.
Okay, Ming would like us to look at gold. Yes, this is gold.
Yeah, I think we must have looked at gold the previous week or so, because we got trend lines on there. Now, admittedly, widespread up as it pushed through that trend line. Topped out by a little bit no demand. But we've got a down bar here, look. And we can see the spread is narrow. We can see it's almost closed in the middle. And we can see the volume is low. There is no selling pressure on that bar. So this market wants to, I would say, at the best, go sideways. At the worst, sorry, go sideways. At the best, it'll probably go up. Now we talk about scalping. We're not talking about how to trade this on a monthly or quarterly basis or yearly. That's, you have to look at longer term charts for that. But whenever we suggest something, it usually revolves around scalping. That means you're in for a few $100 or $1,000 or so. Usually, certainly not longer than an hour or so, and you close your trade out. But there are different skills, different techniques. If you're trading stocks and shares, that can be very, very interesting, as you know. They work just the same on supply and demand. You trade in harmony with the index. It's no good buying a stock in a weak market. You have to wait till the index tells you it wants to go up. And then you go in and buy your stocks acting strong with the index. We have quite a few people that make money with options. And that's what they do. I've noticed, mentioned this before, that those people that seem to make quite a lot of money with options, once they buy the option, they're not in there for usually more than a few days. Because those options, they're crafty really, because you can buy an option and suddenly say, oh, look, I'm making $400 here. right? And then you think to yourself, oh, I've got another 8 months for it to run. That's where the con comes in, because they know perfectly well if you hang on to that, that profit's going to be severely eroded and disappear. So it's options is not long term for us. But it's very interesting that people love trading options.
Okay, Robert has asked for the 6B contract hourly chart.
6B.
Yeah. One moment. Yeah, we did. It was not that one. It's this. Here we are. This is the pound, Tom. Hourly chart.
Right, the pound. Okay. Now, we've seen a down move, right? We've got up thrust, no demand, stuff like that all up here. Okay, it plummeted down. And then lo and behold, we appear to have stopping volume. Here, look, very high volume on the down bar. The spread has narrowed. It's closed in the middle. We've got automatic signals, which the computer suggests a shakeout. Right. There's no demand on that course. Down it goes a little bit again. Again, the volume's quite high. They must be buying on that. That's what's making it go sideways, look. This is going sideways. It's not ready to go up as such. And it's reluctant to fall at the moment. Although we do have a no demand here.
Yes, no demand.
So this is not ready to trade from my analysis. It's building what they call building a cause. A market can't just go up and down when it feels like it. It has to have a cause built into it. In other words, a cause is professional money in the low point must have moved into the market and bought, covered their short positions and absorbed any supply and holding the market up. That's a cause for it to go up. And of course, the cause for it to fall down is distribution in the background. They're followed by trap up moves, up thrust, no demand, stuff like that. Remember, you're up against professional traders who are doing their best to make money. And if you fall by the wayside in the meantime, that's your problem. That's the attitude they've got. A lot of professionals get it wrong too. But a true professional will immediately recognize when they got it wrong and close out their position. You must never ride a losing position. But this pound ready at the moment is doing something, but we're not quite sure. It looks as if they're buying. But if they are buying, they're going to have a springboard come shakeout before they move. And this type of thing. Excuse me. Is that a daily chart? Hourly. Just checking to make sure it's... Well, that live bar will start, tick volume will start. If it's running live, it'll show it, surely.
Just everything seems to have seized up. Oh no, here we go. Some things are moving.
Well, I suppose you do get, it's Friday, right? You do get quiet periods. in these markets. You don't read anything into that, incidentally. Professional players do never go to sleep, never leave their job. They don't go off for coffee breaks or something. It is running live, is it? Yeah, good. Right. Any further questions?
Ready? There's a Leonard has posted something about tick volume. I placed a new post in the forum. Tick volume versus tick charts clarification. Tick volume is a calculation based on the number of ticks within the chosen time frame, e.g., for example, 5-minute chart. The concept of tick charts is not a time-based calculation of bars. Bars are completed after a number of predefined ticks occurring, for example, 3,000 tick chart, no matter how much time has passed by. From a VSA perspective, calculating tick charts make only sense for instruments where true volume is provided as the tick volume in tick charts has always the same height. Example, 3,000 ticks. Do you get that, Tom? No. Shall I repeat it? Or tick volume versus tick charts clarification. Tick volume is a calculation based on the number of ticks within the chosen time frame, for example 5 minutes. The concept of tick charts is not a time-based calculation of bars. Bars are completed after a number of predefined ticks occurring, for example a 3,000 tick chart, no matter how much time has passed by. No? Do you want to speak, Tom?
Yeah, no, that's different versions you're talking about. What we look at is how many ticks there are on the bar. That's what we're looking at. Now, I know this is right because I had it on. I had a computer system here. Unfortunately, it doesn't work at the moment for various reasons. But I had tick volume charts, and that's what it was looking at. I had a Polish program who did it for me years ago called Mirtek, and he had this program that showed you what we call tick volume, and he assured me that's what he was looking at. The number of ticks on the bars. Nothing to do with time or anything like that.
So he said that is tick volume and not a tick chart.
That's what we're after, tick volume. We're not talking about tick charts.
Okay.
But it works because I tested that for many, many months, and I was very impressed with it. And it was just because of Gavin messing up the programmers and one thing or another that we don't have it. So, of course, Gavin's in charge of doing all this, these programs. But hopefully, any new system that we come out with will have proper tick volume. Okay?
Yeah, so Leonard says the questions was if it is the same. So it's not the same, no. Thomas saying, are you talking tick volume like you get on the Forex charts because they don't have real volume in Forex? Yeah. Yes, he says. John says, can you apply volume on a tick chart? No, it's not the same thing. Okay, shall we look at one more chart before we go? 6C hourly. Oh, that's the Canadian dollar, Tom. Hourly chart. Yeah. Do you want the headset?
Yeah. No, you can leave it like this, but You know, there we got lots of red arrows in hindsight, look. Right. Now, that's the difficulty of trading. I mean, do you believe that? When you see that come up thrust, and followed by this, do you believe it? Or do you sit there and think, oh, yeah, I think I'll wait to see if that's right or not?
Someone said unemployment numbers came out.
Yeah, well, they say anything. Unemployment, big deal. What's unemployment got to do with the Canadian dollar? Very little in actual practice. But widespread down like that, look, closing near the low is a sign of weakness. But there was a bit of buying there, look. That's why it's gone sideways. But right now, that huge sign of weakness there and all this up here has not disappeared. It's still there in the background. So this makes the Canadian dollar weak at the moment, although you may get some sort of up move. But I certainly wouldn't be interested in doing anything with this Canadian dollar.
Okay, so that's it for this week. I don't know whether there's going to be a newsletter this weekend. We'll have to wait and see. Yes, there may well be. But anything else to say, folks? No? Okay, well, thank you for coming and for listening, and we'll be back same time, same place next Friday. Have a great week. Bye-bye.